Hello trader, welcome back to another weekend start analysis on gold. As we are almost at the end of the month, FOMC coming up, followed by also NFP. So gold market absolutely should have some increased volume, and that's what we need as a traders to look for a bigger win. We need bigger volume in the market. So past week, we saw that there was a quite dramatic movement on gold. There was a double top, and the market has broken entirely from the structure, which is signaling potential deeper pullback, or we could see the trend continuation. Both possible. Let's see the technical aspect as well as the fundamental, which directional bias is highly likely to happen, and what situation we will be looking into the entry on gold this week at different time frame. So beginning with, first of all, again highest time frame to see the overall direction in this market. Now monthly chart on gold was pretty bullish, and we can see that from the historical perspective, starting from this level, gold was in a significantly bullish momentum, followed by this year we saw the market has broken out completely. Last 3 months price action that you can see on gold was significantly bullish. Now we saw that here 3 months of consolidation followed by 3 months of breakout, and current monthly candle, we are almost nearing to the end of the month, created new this all-time high, and now the market on a pullback. So that pullback could potentially to create a reversal, or we could see bounce off that level. Now this is a very strongly bull market. If you look at the price is above 10 EMA, and it is less likely that gold will entirely drop back below. Instead, but I think gold after this drop here, the bulls will try to break again to the upside. Even the market wants to come down for a deeper pullback, it requires sideways movement before breaking from such a bigger trend. Now if we look at the weekly market structure, there is a very important information that we can pay attention here, is that we have seen gold back to back quite a few weeks stronger bullish impulse. All of them were green candle since this weekly consolidation, and from that weekly consolidation the market has broken with one single bounce, followed by, after the previous weekly bigger bull candle, this week the market has tested that both shadows, that means that lower shadow as well as the upper shadow of the previous weekly candle. Now in that test of this previous weekly candle, we see the market has crossed this for the first time, this weekly low. Starting from here, every week the market was maintaining this series of higher low, and this current weekly candle that has closed, you can see the market has just tested the lower shadow and created a long wick candle. Now there is a liquidity trigger that you can see in that area. Those who are trailing their stop loss has been triggered, and there is a volume in the market, that long wick could push the price potentially up further. So the possibility here for the market to bounce off this weekly open or even crossing higher is possible, as the market is still in a bullish trend. Now looking at the daily chart to see how the market is evolving. Now from the daily we see there is an interesting price action. Every day the market is maintaining this series of lower high here and also series of higher low here. So with a long week and also with a short weeks, the market is in a consolidation. So to break that high, to create a new higher high, to remain bullish, it must first need to break this daily trend line, which is also the series of lower high. And the price to do that, if we look at the lower time frame, it requires liquidity. We saw that the 4-hour candle last day of trading week, after this bullish candle, now back to back two dodgy formation, and also here this is the trend line which potentially could be difficult for the market to break if it doesn't have enough momentum from this level. So both direction here possible. If we look at the 1 hour chart, then to which direction is highly likely to play out. Now, in a situation where if we see the market has completely broken out of this trend line and candle close above, and the retest is where we can look for bullish opportunity in this market, as if the market managed to break this daily trend line and also lower time frame trend line, that will show the price potentially continue to rise up. Now, breaking above also may not be enough, because at any point we could see the market to continue to drop again. That's also a sign the market come down for a deeper drop here. So once the market break that trend line, if on a retest of this previous resistance and support, getting a long wick rejection, that's where you can look for a trend continuation here. In that case, you are looking at gold to go back to this 4371 or even crossing that high to create a new higher high. On the other hand, if we see the gold has created a false break here, that means has broken above, on a retest failed and created a new lower low, then we are looking at gold to break that potentially much lower level here. In that case, you could see breaking the swing low here, coming back to this long-term support level. In that case, we might see that deeper pullback from the weekly and monthly, potentially looking at 61.8% monthly Fibonacci level. Any update also I'm going to post every single day in the channel, so make sure you like the analysis as well as subscribe to the channel for more update every day that I'm posting, including regular live analysis as well as the live trading session. And don't miss out to join the Telegram link below this video for regular update, education, also free trade ideas as well as signals that I'm posting every day. Thank you, and I'll see you soon in my next analysis.